I'm Dorothy Kelso, Head of Super Return. Today I have Hani Assad, co-founder of Advanced Capital. Welcome, Hani.
Thank you, Dorothy.
There's been a lot of negative press about African private equity and venture capital. In your view, what is holding institutional investors back from investing in Africa?
So institutional investors still do not know Africa well enough to commit. In terms of regions, it has the fewest number of managers and they're mostly new managers. And so there is less experience in Africa and private equity in other regions. To give you numbers, there are 827 fund managers managing private equity funds across all emerging markets. 388 of those are in Asia, 72 in Africa. And out of the 72, only 10 are considered experienced managers that have managed 4 or more funds. So it's a small universe for institutional investors to pick from, and they do not know. There's also the perception of risk, that the risk is higher than Africa than other regions. At the same time, they do not see the performance of the funds to overcome that risk. The performance does not cover the premium that they associate with the risk. So these are the 3 main reasons.
Those sound quite significant. What can African GPs do to attract international institutional investor capital?
So there are a number of things. One is to actually give real data about exits, which is very important. To talk about the exits, do not go and fundraise if you only have one exit in a previous fund, because institutional investors tell you, does that represent the market? There's a perception that exits take longer and that exits are more difficult to come by in Africa, but the data actually shows that the exit market is as good in Africa as it is in other regions. However, fund managers don't say that because they only show no exits or one exit when they go back for their second fund, sometimes even third fund, and then show the exits in terms of how much they actually make in those exits and how do they do it. So best way is to do 2 or 3 exits. This is how much time we've held it at, this is how much money we've made, and compare to others. The other data that we find very useful is to provide data on the fair market value of the unrealized component of the holding of a fund. And the fair market value in Africa, that we've done an analysis of 130 companies, and we found that there is an undervaluation, sometimes by 20%, between the unrealized value and the exits, compared to Asia, which is nearly 1-to-1. So why is that the case? The DFIs, who account about more than 40% of the capital invested in private equity in Africa, are a lot more conservative about valuations, but more importantly, there are very few comparable transactions that the fund managers can say, my company is valued at that because there's another company of the same value. And therefore, they're keeping it at lower than what they end up with, and that is not in their favor when they fundraise compared to China, Brazil, India, some of the bigger markets there.
So that's very helpful advice for African GPs. In terms of funds of funds, how have you seen their role evolve in Africa over recent years?
So fund of funds do primarily 2 things. Was intermediate the money and intermediate the knowledge. So I'll talk about the money if an institutional investor wants to invest in a fund in Africa, they would have to put in very small amount of money to diversify by fund. Otherwise, they'll be focused on one. And to diversify, it's a lot of work to put small amount of money in different funds. But through fund of funds, they may get 5 or 6 funds in one go with the same amount of money. So diversification. Number 2 is intermediating knowledge, because fund of funds in Africa do know the market really well, and they know which fund manager to invest with. They spend their time analyzing this. What we do at Advanced Capital is we compare all 3 regions we invest in, so Asia, Africa, and Latin America, and we compare fund managers across all 3 regions, and we can tell to our investors how do the 3 compare to each other, both in valuations and performance. And performance is very important, and that's what we end up with at the end, showing how can investing in that one fund can give them the higher performance they look for.
So Hani, Super Return Africa, have you had many meetings? There are lots of GPs here, and you are an LP.
So my schedule has been back-to-back meetings with GPs of all kinds, from those who are first-time fund managers to those who are second, third, even the more experienced and established. They all come to us because we understand the investor base well. We intermediate the knowledge. We give them feedback on how they compare to others. We even help them benchmark against other regions so that they know what they. So the meetings are happening, unfortunately, a lot of meetings.
So no time for rest for you on this visit.
No time.
Thank you for sparing the time to talk to us, Hani. It's always a pleasure to see you at Return.
Thank you. I really enjoyed very much to be here. Thank you, Dorothy.